Good evening, everyone, and welcome to the virtual IPO meet of Rexpro Enterprises Limited. Okay. Good evening, everyone, and welcome to the virtual IPO meet of Rexpro Enterprises Limited. Rexpro Enterprises Limited, based in Vasai, Maharashtra, specializes in customized manufacturing solutions across retails, commercial, institutional, and industrial sectors. Its portfolio includes store and office furniture, hospital and home furnishing, industrial racks, cabinets, trolleys, sound barriers, and metro platform screen doors. Through its subsidiary, ProGulf Warehousing Solutions LLP, Rexpro caters to warehousing and logistics sector, offering in-house manufacturing and turnkey solutions. The company has established a strong partnership with leading brands like Samsung, Shoppers Stop, Godrej, Nykaa, and more. It's my pleasure to introduce our esteemed guest today, Mr. Premal Shah, Chairman and Managing Director.
Welcome, everyone, and thank you for taking out
Welcome.
your time to attend this virtual meet. It is our honor and our pleasure to host you.
Welcome, sir. Mr. Ragesh Bhatia, Promoter and Whole-Time Director.
Hello, welcome everyone.
Let's start with the
Welcome, sir.
presentation.
Yes, and also Mr. Pankaj Harlalka, merchant banker from Horizon Management Private Limited. Sir, now I'd like to invite you to give a brief presentation of Rexpro Enterprises Limited. Over to you, sir.
Thank you. First slide, please. Hi, welcome. As you might be aware, the Rexpro Enterprises deals in furniture, fixtures, joineries. We also do racking, warehousing, POSM, which is basically point of sale material, and we deal with a large amount of corporate houses. We break up our company into four verticals, which I will then go forward as in the next slide. Yeah, there we go. Uh, as you see from the first slide, that we have been in the manufacturing space since a few years now, and our forte has been to manufacture a customized product on a mass scale. So as you can see that our we are basically into four basic verticals, which are joineries and retail fixtures for the retail outlets, in which you can assume that all the big brands of India, which we have already mentioned in our RHP, is there. We also deal through our subsidiaries into the quick commerce warehousing space and even large mother house warehouses for huge companies which need stocking. We are also into the infrastructure place. In this, we make new items like platform screen doors, which now are being installed in some metros across the India, and sound barriers, which you might have seen on the flyovers of Mumbai. And last but not the least, we also deal in the POSM vertical. POSM vertical is basically the point of sale material that you might have seen at all your kirana shops, or even your new general trade, which is a slightly upgraded version of the kirana shop. Next slide, please. Can you zoom in a little bit, please, Kajal? Yeah. So these are some of our key highlights. We have over two decades, more than 2 decades of industry experience. We have a very highly qualified and experienced team of 65 who are absolutely on our payrolls, and we have a fluctuating contractual base of about 126. We have a pan-India presence, which means that we can do your shop or your outlet at anywhere in India. We've done more than actually far more than 100,000 square feet. We've got a lot of certification like ISO, SEDEX, etc., which are needed for a lot of our global customers. We have three manufacturing units which are all based in Vasai. And just to give you a rough, quick deco on the numbers, first half of FY25, our RO is at 31.22 and an ROC is at 36.66. We're well on a growth stage of about 20% this year. Revenue stands in September at 50, almost 50 crores, and the EBITDA PAT numbers are there right in front of you. Please note that our square footage, when we count our subsidiary, might be slightly higher than what is actually mentioned there, because warehousing is a much larger space. Next slide, please. Like I mentioned earlier, we our product segments are retail, kiosk, POSM, which is the point of sale, warehousing products, infrastructure, industrial products. We make office furnitures. So basically, you every part of your life is somewhere where we can touch. Any hard real estate that you might end up going is somewhere where our company can actually contribute to your life. Next slide, please. Key financial highlights again. Like I said, we are a growing company. Uh, we expect a year-on-year growth going forward, and as you can see, we've grown almost 20-25% year-on-year. We met our half-year target of 50 crores. We are at 49.54. Our margins are robust, and our PAT is also improving as our top line increases. That's because our OpEx is then spread across a larger revenue base. Next slide, please. I don't think I need to run through all the P&L numbers. You guys are far better at this than most people in the country. But these are some of the key highlights. Again, we can just go back to saying that we are a growing company, and we that's the whole reason that we've come out with the IPO, to help us propel our growth and to increase momentum in the growth space. Next slide, please. Some key ratios. One of the ratios that I would love to talk about is, if you take a look at our debt to equity ratio, we are a very low debt company. That comes from our basic philosophy of being frugal with money. We are not people who, just because we have money in our pocket, would go around shopping or spend it on things which might not really benefit the company so much in the long term. We want to, and we will at any cost, continue our conservative approach towards debt. uh, all our, or most of our 90-95% of our debt is a cash credit debt, which is more than adequately covered by our debtors. Our debtors are about 5 times our cash credit limit. So like I said, we are a very low debt company, and that's what we would like to be in the future also. Next slide, please. Again, some more ratios. As you can see, our current ratio is robust. EPS is improving. Asset value has really taken a large jump. Uh, we hope that the trend would continue, and that's one of our key goals in our journey in our business. Next slide, please. Uh, Issue details, I think Pankaj ji would, if he would be kind enough to just take you through the issue details, I would be really obliged. Pankaj ji from Horizon. Okay, I think we've lost him.
Yeah, yeah.
Oh, yeah, he's there. Okay.
So basically, hello. Yeah, so good evening, everyone. The issue is a fixed price issue, and we can participate in the issue from the 22nd, that is day after tomorrow, till Friday, that is till the 24th of this month. And the listing will happen obviously then by the 29th of this month. Uh, the issue size is of 53.65 crores. We have a small OFS in the issue. So there is a 4.5 lakh shares which is in the issue of OFS, and 32.5 lakh shares is there for the public again. So aggregating about 37 lakhs multiplied by 145 gives you an issue size of about 53.65. So 50% is kept for one category, which is the HNI and QIBs and all category, and the other 50% is for the retail at large. So Uh, this is uh, much about the issue. We have registrars, we are the lead manager. This will be our 14th issue that way, which is opening. So, and it's listing on the NSE merge. Thank you.
Just one quick correction. I think the issue is opening tomorrow. I think Pankaj said Friday. It's open from tomorrow till the Friday.
I said 22nd to Friday.
Oh, I'm so sorry, Pankaj. Thank you. Sorry. Bye bye.
Thank you, sir. Thank you, Premal sir and Pankaj sir, for a valuable information. Now we will open the floor for Q&A questions. So I encourage all the participants to post their questions in the comment box below. So the first question is from Pratima Kanikar. With a wide product portfolio, which segment contributes the most to the revenue, and how do you plan to grow underperforming segments?
Uh, okay, I just take that. Currently, retail does contribute a larger part of our portfolio. Yeah, however, institutional sales, which means that we are an OEM to certain big brands, they've also really caught up. So this year, I think in about half year, retail is around 40%, 45%. Institutional is about also around 40%. POSM is about 10%, and the rest comes from our warehousing business. We are very keen on actually expanding our warehousing business, and we are actively working. I'm not really sure how much I can tell you because it's a little forward looking statement, but yeah, that is something that we are focusing on. Uh, we have a strong marketing team, and we assume that we are pretty confident that our growth will be sustained on across all sectors.
Next, please.
Which one would you like me to? Okay.
No, no, Sashi sir. Can you share insights on the current order book size and how do you plan to build and maintain it?
Our current book order is around 16 crores as on date. Like I said, we have an active marketing team. uh, every month we fill in our orders from our. So one of the beauty of being in large amount of in a variety of sectors is that even if there's a slowdown in one, it then another sector kind of tends to help you tide it over. And we've always been lucky enough, and we've always worked towards having a robust order book. We think that this state of around our order book always being somewhere in the 13 to 16 crores should be maintainable for this year completely, for this calendar year for sure. Yes.
Next, please. What is the company's core strength and competitive advantage in the current market landscape?
Uh, well, the core strength, and I think we're pretty unique in that sense, is that in the sense that we mass produce a customized item, and that is not something that many companies across the world do. So that is a real advantage that we have. Second is we are a decently low cost manufacturer, and we are able to deliver our customers continuous quality products, which is why if you see our RHP also, usually we get a lot of repeat customers. In fact, all our customers are always repeat customers for us. Uh, and a lot of big brands work with us. So that is all. So their learning also then helps us to improve our production and manufacturing facilities, our way of manufacturing. That and I think we look ourselves as a really as a hardcore manufacturer rather than anything more fancy. And I think the fact that we can produce fast, cheap, and at the right quality is what sets us apart from a lot of other companies out there. I think that's one of our main competitive edges.
Okay. Next,
Also, sorry, just
what?
one thing. Also, the fact that we are spread across sectors. I mean, I can't really keep on. I mean, I can't repeat it enough. The one of the main advantages that we are spread across many sectors, so that really helps us too.
Okay. Next is what measures are in place to maintain long-term relationships with existing clients like Marks and Spencers or Samsung?
Uh, See, one must appreciate that these are extremely professional companies. The only way to maintain a relationship with them is to make sure that you deliver to them every time. Uh, so there's a term called OTIF, which means on time in full, and you have to be the right cost producer for them. So as long as, I mean, that's really the key. There is no other fancy thing. As long as you are able to meet what they want, these are customers who are not very keen on changing vendors, because in a sense we are a very key component of the supply chain, because unless the store is open in the right format, their distribution also takes a hit. So we are a very key component, and they are not very keen on changing vendors. But what they would want is they want absolutely timeline. They're absolutely sure on the timelines, and they are very hardcore on it. Because as you are aware, in India, most shops open on auspicious days. So that is, those deadlines can never be missed, and they do not compromise on quality. Prices are fair, but they are kind of fixed, and so as long as you meet what they require, it's reasonably easy to maintain a longer term relationship with them.
Next, hello, sir. My question is, how does your team manage the complexity of delivering highly customized furniture and fixtures for large-scale clients?
Well, this is actually a trade secret. There are there are processes in place which allow us to do that. Let me be very honest. It's been a learning journey for us. It's taken us quite a lot of time to reach at this level. But yes, you are right. It is because it's highly complex. The main advantage is that there is far lesser competition, because not many people want to take this kind of complex projects. Uh, but yes, it's a drawing base. We are a drawing based, engineering based company, and we work in an environment which everything is. Everything is logged, everything is kept on the it's kept in our database, so we know exactly what we are making, and there is a system. I mean, you would have to visit our factory to actually understand how the magic happens. But yes, it's doable. It's difficult, but it's doable.
Okay. Next, Maharashtra contributes over 70% of the revenue in FY24 and September 2024. What are the risks associated with the concentration, and how does the company plan to diversify its revenue base geographically?
Well, see, the fact is that we are based in Maharashtra, so our clients actually, a lot of our customers, they prefer to have a lesser logistical cost, because if and but we do a lot of out of Maharashtra work also. But the thing is that all customers prefer to have a lesser amount of money and time spent on transit and transportation, because in India it's an extremely challenging effort to do that. It's an extremely challenging task to do it. So yes, we even in future Maharashtra would continue to be our number one state which would be giving us business. However, we are. I don't know, Pankaj, can I say what I'm going to do in the future? Or but there are plans wherein we will be getting
Yes, without
a lot
Yeah,
more
you
revenue.
can say what you want about the business, but you can't talk about numbers. Numbers you can't talk.
Okay, so yeah, well, there are plans afoot to open some satellite offices wherein we will be catering to other states also. And but see, Maharashtra is a big state. Maharashtra has the beauty of it is that it has Mumbai and Pune, which are the two biggest metros in India. So a lot of the work is basically in this state. Also, what also happens is that all of our institutional customers, they take it in a Maharashtra go down, but the material is actually used in other states also. So while the number says 70% are actually a material goes, a lot of it goes out also, but it goes to a warehouse which is in Maharashtra, which is why it gets classified as Maharashtra.
Okay. Next, can you provide insights into the target markets and growth potential for the company next 5 years?
Well, definitely, we are very keen on expanding our footprint in the warehousing business. We see a lot of potential coming because of quick commerce there, and the dark stores which are coming up, and our products are absolutely bang on for that sector. That is one of our huge target market that we are eyeing. We are also eyeing for us a reasonably larger piece out of the infrastructure because there is a lot of spend which is going to happen in the infrastructure in the coming 5 years or a decade, and I think we are poised to actually quite capitalize on it. The thing is that in infrastructure again, it's a typically that it's difficult to get in, but once you are in, the pie tends to grow because you are then pre-qualified to meet a lot of norms, and then we become qualified to fill in a lot of tenders on our own. So we have that. We are actually acquiring that that value of that work or the which will make us qualified to fill in a lot more tenders. So that is another area that we are very keen on. We are also quite keen on expanding some of our retail customers, but going into a wider width rather than more depth. So we want more of that is a thing.
Okay. Next.
Uh, I think this one we already answered.
Yeah, next. Which sectors will be the primary growth drivers for next 5 years?
Uh, Ravindraji, for sure, we are very confident on warehousing and infrastructure. There is no doubt in my mind. Lot of the MNCs are now pumping in huge amount of money in the quick commerce space. You might be aware that Amazon is coming with their own format also. The numbers thrown about go from 5,000 to 50,000 dark stores. I'm not privy to their plans, but I know for a fact from our conversations with them that the numbers are huge, and for sure we are going to see a large spurt of growth in that space. We are, like I said, we are also going to see a large spurt of growth in the infrastructure space because more metros, more flyovers, these are all great opportunities for us. Retail will continue to grow typically at the rate that the Indian retail industry will grow, which is pegged at around anywhere between 8.5 to 12%. So we are well poised to get that because just by default we'll be getting a lot more work, even if we don't pitch, and we are actively pitching to a lot of people who are not our customers today. And I think the IPO will help us pitch to them even better.
Next. Are there any plans to launch any new product categories or enter untapped niche with furnitures and fixtures?
Currently, we have no plans to enter any more product categories. We feel that we are very well poised to expand on the base that we have. We do not want to add to our servicing cost. We would rather go deeper into the sectors that we already are, and honestly, in a couple of them, we've just begin to scratch the surface. So that would be our key focus going forward, at least for the next 2, 3, 5 years.
Okay. Next, what is the typical lead time for delivering large orders and how do you ensure on time delivery?
Well, typical delivery timelines are from, depending on the size, are from 25 to 45 days. Again, on-time delivery is a daily effort, but there are PERT charts and Gantt charts and all are made from the day one once the order is booked into our system, and we make sure that all timelines are adhered. And if there is a if we feel that it's going a little out of control, then emergency measures are immediately put in place, because like I said, the opening date is sacrosanct for all of these guys. Nobody is going to let go for Murat because we were late. So also we carry stock, so that also helps us. Please understand, we carry a large amount of raw material and lot of stuff which is in semi-finished. Then we finish it very fast, so that also helps us in delivering larger orders.
Okay. Next. Hello, sir. PAT grew from 63 lakhs in FY23 to 5 CR in FY24. What were the main reasons for this growth?
Well, if you see the RHP properly, a lot of our PAT has come from our subsidiary, which had the first full year of operation, which is in the warehousing space. We have, again, it's a decent margin game there, because it's almost a fully automized factory. There are very little human intervention in that. Secondly, in the space that we are in, once our OPEX is kind of fixed, we are not increasing our OPEX. We have been able to keep that in control. So as our top line has grown by about 20-25%, a lot of the additional business has contributed, uh, in overweight terms to our bottom line, because that additional business delivers a far more margin to our business as a whole, because our OPEX is then spread across a much larger base of orders.
Next. What is the company's expected top line and bottom line for FY25 in terms of percentage?
I am not sure I can answer that. Can I answer that, Pankaj?
Yeah, he has asked for percentage. You can give a percentage kind
Percentage
of
in
guide.
terms of
Okay. Madam, I would. I mean, We are 100% sure that we will cross a 20-25% top line, and our bottom line will pleasantly surprise all our investors. For sure, it will be in very high double digits for compared to FY24.
fair enough, sir. Next. The IPO objectives include the funding business expansion. Could you please provide the details on the specific market or geographies targeted for the growth?
I think the question here is about unidentified acquisition, or what exactly is the what exactly which object are we talking about?
The
Because
IPO
every
objective.
okay, so one of the objective, of course, is to have better machinery, just by having a so our idea there is to automate a lot of our processes. We are getting in robotic lines, which will further decrease our OPEX. In fact, I think we will be so low in OPEX that it's going to be really amazing to deal that. Uh, that is our key to. Also, it allows us to produce faster and better, so we can then cater to a lot more customers than we currently are. So that is our main objective, is to that will allow us to expand our footprint to other places that where we are not present. By other places, I mean other customers where we are not present, because we will have a much faster turnaround time than most of our competition.
Okay.
As far as
Next.
geography, is it wherever the headquarters are, I mean, wherever our customers are based, that really is not a problem for us.
What is Rexpro's long-term strategy to diversify its revenue stream, considering its current focus on retail, industrial, and infrastructure sectors?
Siddharji, I mean, these are three very large streams. If we can achieve even 80% of what we set out to do, in 10 years, you will see something which will blow your mind, because industrial and infrastructure alone can contribute crazily from here on. India's infrastructure story is just started. Uh, our consumption has just started. Dark stores are just beginning to happen. So honestly, we are at the cusp of this. If we can just do these four streams that we are doing properly, there is no reason why we cannot grow exponentially.
Next,
Next.
what is the total manufacturing capacity and what is the current capacity utilization?
Uh, Madam, I believe that is already mentioned in the RHP.
Uh,
I would request you to take a look at it. It's a
Okay.
detailed explanation is given.
Okay. What percent of IPO proceeds will be allocated towards growth initiatives, debt repayment, and working capital needs?
So there is no debt. There is no debt. So there is no debt repayment. Like I said, we have only cash credit of 4.5 crores. Uh, Working capital, we mentioned in our RHP that we are going to require 10 crores of working capital, and that will be primarily used towards stocking more raw materials so we can give a faster turnaround time to our customers, and the rest of all the money is going to be used in growth initiative like buying better machines and upgrading our plant. So I hope that answers your question.
Next. Next question, please. What is
I think
this is
we can,
done, I think.
yeah, we've done this one.
Is there any certain timeline of completion for such an order book of 16 crores?
Yeah, well, typically, like I said, that so when we say order book, right, we get POs. That's what we considered as an order book. Uh, and all POs have a timeline which is set. So depending on, so yeah, but this 16 crores will be for sure will be done by say end of Feb, first week of March, which is our typical manufacturing time.
Next. Where do you see Rexpro in 5 years? Will you stick to your current industries or expand into new ones? We have answered.
So, like I said, we are going to stick to our thing because that's something that we have learned well. But the market size of the industry that we are in is going to grow exponentially. So, I feel confident enough that we will get our share of the business, our rightful share of the business in that.
Okay. Next. What is the IPO size?
It's Pankajji, you want to take this?
Yeah, so the IPO size is 53.65 crores.
Next. All the best
Thank
for your upcoming IPO.
thank you, ma'am. I hope you do subscribe. You will
Next.
make money long term for sure. I thank you all for wishing us
Thank
the
you
best of luck.
for,
I do hope all of you subscribe and make our IPO a big success. And please spread the word to your friends and family.
yeah. So, sir, I believe that we have addressed the majority of questions. Thank you, everyone, for attending the virtual IPO meet of Rexpro Enterprises Limited. I extend my best wishes to you, Mr. Premal, sir, Ragesh,
Thank,
sir, and Pankaj, sir. All the best for your IPO.
Thank
thank
you.
you,
Thank you
everybody,
very
for
much.
joining
Thank you
us.
for attending.
And God bless everyone. And let's hope we succeed together.
Yes, definitely. Thank you, sir. Thank you for coming.
Thank, thank you, everybody. Thank you for your time. Appreciate it.